markets are down a good bit since the end of July, anywhere from 5 to 10%. So we wanted to come to you, kind of explain what's been happening and what's most important to keep top of mind.
Yeah, Chip, it's times like these that bring to focus that markets really trade on three things. They trade on fundamentals, on macroeconomic factors, and on technicals. And at Savant, we focus mostly on fundamentals, which we still think are pretty strong. But in the short run, these other factors can create a lot of volatility.
And speaking about volatility, we know volatility is perfectly normal part of investing. It's a premium we pay to earn higher returns. So the chart up on the screen looks at returns going all the way back to 1979. And these are actually annual calendar year returns shown in the teal bars. And you'll notice, number one, that there's a lot more positive annual returns than negative. But then around those teal bars, you can see the black and red whiskers, which show the largest intra-year gain and decline within each year. And even in years with high calendar year returns, we can have some large intra-year declines. It actually happens quite frequently. And on average, we experience 14% intra-year decline annually. And in addition to that, daily dips of 2% or more are normal as well. Those occur about 8 times per year. So volatility, perfectly normal and should be expected.
Exactly. And if we look at performance year to date, the US market is still up nearly 10%. And other indices are positive as well, despite these 5 to 10% pullbacks that we've seen recently. Most importantly, when we zoom out, longer term, markets have provided significant growth over inflation, which has allowed investors to fund their goals and objectives. So volatility really is the work that we do. It's the price that we pay to get these returns.
Well, zooming out really definitely added some good context there, Zach. But what can investors control when they start to experience volatility like this?
Well, we believe it's critical to have a financial and an investment plan and to stick to it. At Savant, we utilize an evidence-based approach to investing, which means we make our decisions based on facts and not on emotion. We've learned that markets reward the patient and punish the impatient. So understanding this volatility that you've been talking about is really key to keeping a level head.
More great reminders, Zach. So key takeaway for everybody today, volatility is normal. Zooming out can add some context, and that matters a lot too. But then focus on what you can control. Never make important decisions based on emotion, and buying high and selling low never works. So if you have any additional questions or concerns about the market or your financial plan, please do not hesitate to reach out.